I want to welcome everybody to today's webinar. Thanks for attending and taking time out. We have Candice Caruso from Pango Financial, who will be speaking on using retirement funds to fund a franchise. You're welcome to ask any questions in the chat box as we go along. We'll answer all of the questions that you guys type in there. Welcome, Candice.
Thank you for having me. I appreciate the opportunity to share some information on the topic and educate individuals on how they can use retirement funds to capitalize a franchise or business.
Great. I'm just going to start out by letting everybody know all the information provided here is for educational purposes. CamaPlan does not recommend or endorse anybody. We're a neutral third party. We encourage you to consult with your attorneys, accountants, financial advisors before entering into any types of investments. We're not going to go deep into this, but basically we help you use a self-directed IRA to invest. We also do solo 401ks. Candice is going to get into that and the benefits of using these qualified plans. There's a few things that you can invest in: collectibles and life insurance. As long as it doesn't classify as that, then most likely you can use your self-directed IRA or 401k to invest with. This is what we commonly see most of our clients investing in. We're not going to go deep into this today, as we're going to go more to the business side with Candice. This is good because it shows an example of why you guys want to start using these accounts: tax deferred, tax free. Basically, if you started out in a this shows this is like a Roth IRA here. This is tax deferred or traditional funds, and this would be you personally with a 30% tax bracket and a 10% return for all of these accounts. So you had $50,000 in each type of account. You'd end up with $2.2 million in your Roth. You'd still end up with that in a traditional IRA or tax-deferred 401k or qualified plan. However, like I said, you had a 30% tax bracket in this example, so you'd end up with 1.5. Paying all the taxes, doing it personally, you end up with 748. So that's the real power of being able to use these tools. And we'll get more into this when Candice gets on. We're a neutral third party. We don't give any investment advice. We don't sell any products. We'll help you with the reporting of your IRAs. And my contact information is rfisher, that's Fischer, @CamaPlan.com. You can also reach me at 215-283-2868, and we'll help you with anything that we can. I want to, at this point, welcome Candice, and I'm going to switch the screen over. So Candice, why don't you tell us, start us off with a little bit of what you do and how you got into this.
Sure. So my firm, Pango Financial, specializes in small business and particularly franchise funding. We work with both debt as well as equity products. I have been in the financial service as well as third-party administration space now since the late 90s. I started my career early with an actuarial firm and learned the business in that space, and really just had a passion for helping small business owners and helping them understand how to build wealth, as well as creative opportunities to invest in themselves. So just to give you kind of a little perspective, and I know this is a webinar, so it's always nice to put a face to a voice. This gives you a snapshot of some of my experience. But here at Pango Financial, we do have a unique product, which I'm going to cover today, called our Dream Spark Plan. And that program allows individuals to actively own as well as invest in a business using tax-deferred retirement wealth.
Great.
Also, do you want me to cover a little bit about the firm itself? Would that be helpful to the audience?
Yeah, I think that'd be great.
Okay, wonderful. So Pango Financial, one of the things that we do for our customers is we invest in technology to make it easier for customers to get through an otherwise fairly complicated process. We do all of our communication with our clients nationwide. So that it combines telephone consultation, it combines the use of our online client experience or onboarding platform, and I'll explain more of those details as well, but that's something that's distinct and unique to us and is proprietary system that we've built really to enhance the overall experience for our customers. Again, we are truly focused on entrepreneurs and making it easy for them to achieve their dream as well as having the ability to invest in themselves. We also have a relationship and are essentially a subsidiary of De Novo Corporation, a 20-year provider of financial service industry solutions. So really have a vast group of experts all in the financial service space to better meet the needs of the small business owner, whether it be from a debt financing, a retirement savings perspective, or our unique program, the Dream Spark Plan, which I'll be touching on today.
Great. So with the Dream Spark, I know that's the heart of today's discussion. You want to tell us a little bit more about that and who typically uses that type of plan?
Absolutely. So the Dream Spark Plan, as you'll see on the screen here, is an equity tool. So it truly is someone leveraging retirement wealth to then invest in their own business. So it's no different than investing in a publicly traded stock, bond, or mutual fund. Just in this case, you as the employee as well as the employer have the ability to roll over existing qualified retirement savings, and you can decide how much you'd like to invest in the business. This is something that can also be paired with debt financing like an SBA loan, because in many cases they do require cash down. So it really has some unique applications. Many of our customers that benefit from this program are individuals transitioning from corporate life, working in a 20 to 30-year career or more, and climbing the corporate ladder, and then making the transition into entrepreneurship, because in many cases they're the individuals that have built up a majority of their wealth in retirement assets. And this gives them a unique ability to decide now if they would like to make a career change and start on the path of entrepreneurship and invest in themselves. So one of the things that I did also want to share, Ryan, is again that this is tax deferred and penalty free, but this is also a retirement plan. So that's something we'll be touching on, some of the key compliance requirements. One of the other key benefits that many individuals that make the transition from their corporate career into being an entrepreneur that they find attractive is that this program allows them to have less debt financing. So, it is important to be well capitalized when you go into business. And so with this program as an available option, this may put them in a better position to get to profitability more quickly. And
Great.
As far as, do you want to just kind of go through the type of available retirement funds?
Sure. You kind of have it up there. I mean, all of these plans that you have on your screen, Candice, can be rolled into or transferred into a plan that you guys sponsor, correct?
That is correct, absolutely. So most familiar to many individuals is 401k, a profit sharing plan, or a traditional IRA, but there's a large array of other types of retirement accounts that can be rolled over. However, the one account that cannot are Roth accounts. Roth accounts are not eligible to be rolled over to the Dream Spark plan because it's a qualified retirement plan. And one other thing
Correct.
to touch on is that this is pretty quick. Usually the entire suite of services that I'll be covering with the audience today, it takes about 2 to 3 weeks. So in comparison to other forms of capital, it's a pretty quick process.
Candice, just noting on that Roth point there, if someone was to start a new plan and start doing contributions, they could have a Roth component. Is that correct?
We can add a Roth 401k feature for them to continue deferring. It's just the ability to roll over funds that they don't have the option to roll from a Roth IRA into a qualified plan under the IRS rules.
Correct. Okay. How long does it take someone to open an account and start a plan with you?
So really quick, usually about 2 to 3 weeks, and that includes actually the incorporation, which in many cases we're working with someone who's brand new to business ownership, particularly franchisees. So when someone comes to us that's evaluating particularly a franchise, they may not yet have a corporation, plus there are some very specific corporate structuring requirements that I'm going to touch on as well.
Okay, great.
So I'd be happy to go over how it works and give you some of the mechanics. Would that be a great place to kind of move on to next?
I think so. I mean, there's a standard disclaimer that you can't use retirement accounts to invest in businesses you work or control. So when you touch on this, if you can kind of show us how DreamSmart remains compliant with that.
Absolutely. I'd be happy to do that. That's not a problem at all. So I think I'll organically touch on that through the setup process. So just to start off, because many of you may not yet be familiar with how this all works, I think it's great just to start with a simple illustration. So the funds would be rolled from the existing IRA or 401k over to the DreamSpark plan. And then from there, the funds can be invested. And I emphasize the word invested because this is not debt. So it can be invested into the business or franchise. And this is accomplished, and I'm going to get into the details of this in a moment, but just at a very high level, this is accomplished by creating a C corporation, which we take care of as part of the engagement. We also will customize the qualified retirement plan, which we call our DreamSpark plan. The individual can then roll over the funds and then, of course, invest in the business. So let me take you into a bit more detail. And I think, Ryan, this will address your question as to why this isn't viewed as what otherwise you think of as a self-dealing or a closely held transaction.
Sure.
So the first piece of the process is that we have to set up a C corporation. So C corporations are non-pass-through tax entities. They are corporate entities that provide liability and separation from their owners, but there's no flow-through of profits or losses to the investors of the business. So it's completely independent from your personal tax return as an investor in the business. That is the only corporate structure that would be allowable under the IRS and Department of Labor rules. With LLCs or S corporations, this is actually prohibited. So one of the key requirements and one of the reasons we actually include establishing the corporate entity is that because we want to be sure that the corporation is established as a C corporation, also that our client's accountant or CPA are also aware of this key requirement. So the C corporation status will have to stay in place as long as the retirement plan is a shareholder in the business. And we work with our customers. C corporations, in some cases, individuals have concerns about double taxation or things of that sort. It really just requires truly proactive tax planning. And one of the ways that you can benefit from being a C corporation is in the years that you are profitable is having a consultation with not only our firm, but your accountant or CPA around the third or fourth quarter of the year to talk about how you can contribute back to the retirement plan to reduce your profitability or how you can reinvest back into the business. So that's something we work with our customers as well over the life of our relationship. Now, once the C corporation is established, we will obtain an EIN, an employer identification number, and we do offer registered agent service for the first 12 months. So all included as part of the initial suite of services. The second piece of the process, and the really critical piece, is that we will customize the DreamSpark plan. Our customers are going to be on our volume submitter document, which has been pre-approved with the IRS. It also has specialized language from our ERISA attorney, and that states that you can invest in the stock of the business, typically by design, exclusively from rollover dollars. And this is something that's not just available to the business owner, but also other employees. So that's something that some individuals are concerned about. However, from a discrimination point of view, you can't deny an employee the investment options that are available to the employers. However, the employees tend to not find that as much of a interest to them as it would for an employer. And we can get into that in the Q&A if there's questions around that as well. Once the retirement plan is established, we will obtain a unique trust ID for the plan, as well as establish some key board resolutions. And at that time, the individuals that are ready to roll over their funds will be able to roll over their money directly into the retirement plan. Of course, they have to be an employee first, employee being a W-2 wage earner, and then they can invest as much or as little of that rollover into the stock of the business as they wish. So this is something that is, of course, at first a very attractive way to fund a business, but also will give the employer as well as the other employees that work in the business a longer-term retirement savings tool. So any questions, Ryan, before I jump forward? Well, I guess we're good to go so far, so I'm just going to continue on. So as far as legal and compliance, so I think compliance is really key with any product, particularly something as complex as our DreamSpark plan. And again, although this is complex, we're the experts and we make it easy for you as our customer. So this is something that has been around since 1974. And it's been around since 1974 under a program called the Employee Retirement Income Security Act, also known as ERISA. This program is also something that is very commonly used in conjunction with IRS and DOL rules, and there are guidelines around this program that came out in October of 2008 because of its popularity. Many people say, I've never heard of this type of retirement program before. However, there are many similarities, and the same rules that apply to this program also apply to employee stock ownership plans, or ESOPs. So just to kind of cover some of the key compliance requirements and how long this has been in existence, I thought that that would be helpful to the audience as well. So I can continue on in going through some of the key compliance pieces, and we just like to know that, you know, when we work with our customers, it's truly a consultation. We want you to be aware of not only all the benefits of leveraging these dollars as an investment, tax deferred and penalty free in the business, but also some of the responsibilities that come along with it. So this is a qualified retirement plan. This is something that will not just be available to owners, but also employees of the business, including the ability to buy stock. However, also publicly traded investments are also available under this plan. You cannot amend this plan to remove the retirement feature to have the ability to invest in stock while someone is holding shares. And we do work with our customers as well as their CPAs if they would like to buy back stock over time or discuss exit strategy planning. Also, fees have to be paid outside of plan assets. And there is a really important requirement that's emphasized in the 2008 guidelines around valuation of assets. So because there is not a NASDAQ or New York Stock Exchange, there is a need to have a third-party business valuation anytime there is a purchase or sale of stock. We do have resources that we can introduce you to as our customer, but also you're welcome to select someone within your local network or community as long as they're certified to perform that type of service. And this is in place of, you know, the NASDAQ or New York Stock Exchange setting the value. Also, this plan does require that contributions continually be made to the plan. In addition, the employees will need to be disclosed on any plan benefits that they may be eligible for. And we provide some great tools such as the summary plan description to make that easy for communication by the plan administrator. Also, the, just general compliance of any retirement plan statements, disclosures, things of that sort, which we'll prepare for the customers, do need to be provided to participants timely. And also informational filings like the Form 5500 and other services. And we do, as the third-party administrator here at Pango Financial, streamline much of this for our customers, so it makes it much more efficient and easy for them to communicate all of this, not only to employees, but also to understand it internally. Any questions, Ryan, before I jump forward? I know that's a lot of information I just covered.
Yeah, and I think you're heading in this direction. I've noticed that some franchises who fund their retirement accounts also raise money to fully fund the franchise. Does this open up opportunities for investors who may want to be involved in operating a franchise, but would invest passively? And how would that work?
Yeah, so this is actually our Dream Spark plan can be complemented with a CamaPlan, so a self-directed IRA. There could be individuals that passively invest into the business as well. They would need to be vetted, and one of the areas that Pango Financial and CamaPlan can work together is that we have individuals that are pursuing franchise ownership in particular that may be seeking funding. They have particular concepts, and these are well-established franchisors. When I say, and so let me just distinguish between a franchisee and a franchisor just for those individuals that may not be familiar in the franchise space. A franchisor is the entity that actually will sell the licensing agreement and rights to the franchisee. They usually will have what's called a franchise disclosure document and a track record of success. The franchisee will then buy rights to a particular area or location. We work with the franchisee in providing them with a whole variety of different funding programs, the Dream Spark plan being a unique way to fund a business through equity, but it can also be complemented with a self-directed IRA for passive investment. So as long as it's not a relative or a party in interest, they can then invest in a well-established franchise if they feel comfortable and would like to further vet the owner. That could be a way to also receive the gains and benefits of investing in a franchise without actually being the owner-operator.
Gotcha. Are there any other aspects of this approach you think would be helpful to our audience today?
Well, I thought it might be helpful because of the fact that I touched on some of the technology is to give you just a little bit of kind of how we make this, this process very easy for our customers. So we do have, again, that online client experience that I had shared with you. This is just a snapshot of what that looks like. So it really, truly is interactive, easy for the customers. You'll even see the little blue question marks where you can highlight over to get additional information. And this is all paired with service. So this is not intended to be in place of that personal touch. It's really intended to make this a much easier and more efficient process for our customer. Also, it will not allow individuals to go ahead in proceeding in the setup out of order, because this is like building a house. You have to build one block at a time. We're building the foundation. So we want to make sure that each step is addressed in the right sequence and that our client understands when they need to pause and allow us to take certain steps before moving forward. So all of that is built into our client experience to make this much easier, more efficient, and of course more affordable to them as well. So one of the things that we have positioned ourselves by leveraging technology is really to strive to provide the best value and price for the customer. We do actually, it's a very small marketplace. We do position ourselves as the price leader, but also one that strives to provide a high level of value. So comprehensive service, 24/7 access, money-back guarantee, long-term compliance. And we're very transparent on our pricing. Our pricing is flat fee for service. The setup of the Dream Spark plan is actually $3,745 and includes the incorporation. And then, of course, we do need to maintain the compliance of this retirement plan. So we charge $89 per month up to 10 participant accounts within the plan. And that really kind of is the program in a nutshell to get things started, but I'm happy to address questions and get into any details, and certainly following the call, if anyone is interested in a funding consultation or to learn more, myself and my team are happy to make ourselves available.
Let me ask you another question there, Candice.
Yes.
What happens if a business or franchise fails? Are the clients left destitute?
So if a business or franchise is not successful, it's just like investing in a publicly traded stock that does not perform well. So if they're not taxed on the funds that were invested, and there would be no penalty. But the success of the business does determine if that investment goes up or down in value. So if there's appreciation or depreciation of that stock. So truly, when someone decides that they want to go into business for themselves, they are putting their retirement in their hands. So they really need to be confident about the success. And one other thing to be really balanced in sharing this is that this can also be paired with debt financing. So if someone wanted to maintain a certain level of diversification in their retirement portfolio and they don't have a large enough retirement balance to do so, they could use this as a down payment on an SBA loan and then finance the rest, or seek potentially investments from passive investors through self-directed IRAs or other sources.
How long have people been using this strategy, and is there a success rate that you've seen?
So this has been available since 1974, so over 30 years. However, I would say that the popularity around this particular type of plan design and utilizing the code emerged in the mid-2000s because of the change in the economy. So the fact that corporate careers were shifting away and not necessarily providing the same level of security that they had in the past, as well as some of the aging workers finding it difficult to find positions that provide the same level of earnings that they were used to, there was a large increase in interest and popularity around this type of program. And it's been well adopted in the franchise space because many people that transition out of corporate America tend to pursue and be attracted to a franchise business because of the fact that it's a proven model and has systems in place to give you not only a higher likelihood of success, but quicker ramp up.
Great.
So given
That's
that
awesome.
information, there's, the failure rate is much lower than the statistics you would see in general around startups or small businesses.
Gotcha. Great. That's good to know. So that's your contact information. That's the best way to get a hold of you, Candice?
Absolutely, yes. So you're welcome to email me directly and call in to us here at Pango Financial, or visit our website. We have lots of detailed information on our website, as well as a Contact Us page. Please do follow us on Facebook, Twitter, and LinkedIn. We always appreciate the support and would love to keep you informed of future events.
And you also had said you'll give everybody a free consultation that's on this webinar today. Just say they were here, and you'll talk with them about their particular situation?
Yes, and so that part of that consultation is truly understanding the individual's goals, objectives, how they would like to pursue business ownership, learning about their finances, and then presenting all of the different options that might be available to them in funding a business.
Great. Is there any additional information you'd like to share with us today, or?
Well, certainly, if anyone would like more information, I'm happy to send out, an informational email following the call. Again, we have transparent pricing. A lot of the details I've shared with you in this presentation you'll also find on our website, and we do have a great commonly asked questions, but it's always wonderful to speak with individuals directly and help identify their ideal funding solutions. So please take advantage of the complimentary funding consultation and let me know if myself and my team can be of service. We're happy to help.
And thanks, Candice. I did see a question that came in that I think I missed before. What is the role of the FDA loan if it is a franchise that has no food service involved, like a dry cleaning business?
So an SBA loan is a small business administration loan. That can be used, actually, the SBA loan program goes up to as high as $5 million. It can also go much lower. There are loan programs that go down even as low as, into the 50,000 mark. For a dry cleaning business, an SBA loan could be used as the working capital for the business. The Small Business Administration does typically require about a 20 to 30% down payment on the loan, and that's actually what the lender will require you bring to the table, for it to meet the underwriting requirements. With that being said, the remaining 80 to 70% would be amortized over a 7 to 10 year period, and the interest rate, the highest interest rate that you can be charged typically for an SBA loan is prime plus 2.75. I believe prime right now is at 4.25, so that would put us around 7% on the high end. It could be slightly lower, but tends to, for new businesses and new franchisees, be closer to that benchmark. So hopefully that provides at least an initial introduction. And if that individual has specific questions, I'm happy to, address the SBA loan program more specifically with them as well.
Great. Well, I encourage everybody to get a hold of Candice if you think you're in a position that she can help you. Again, her contact information is on the screen. I appreciate the information today, Candice, and everyone who attended. Again, you can reach me at CamaPlan.com, CamaPlan.com, and we'll help you guys any way we can. Thanks a lot, Candice.
Thank you. I appreciate it. I hope everybody has a great day and look forward to hearing from all of you soon.
Thanks. Bye-bye.
Bye-bye.